Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is market historian Bob Hoye. He's the chief investment strategist for chartsandmarkets.com. Welcome back to the show, Bob.
Yeah, hi, Jim, and a happy Friday to us all.
And for your regular listeners, you'll also be a guest on This Week in Money this weekend. So a doubleheader from Bob, as I said, twice the fun at half the price.
Good line.
We live in very interesting times, as that Chinese curse has mentioned several times. May you live in interesting times. Bob, your company does have some help for people trying to navigate themselves through all the things we're seeing in the markets today.
Oh, yeah. You've got, let's call it an ordinary world of bull and bear markets, and usually most of the people think it's driven by the economy. But when you get into wild financial markets like this, there's fundamental analysis just does not work. So this is where we have developed technical tools over the decades that have worked well. You learn from it. And so in this kind of volatility, the only thing that provides a decent guidance is overbought or oversold and timing and that sort of stuff, and we've got it. So this is the ideal time to be looking at subscriptions, and what we're looking for here is some lows for the key stocks and bonds, low-grade bonds, that sort of thing, and commodities, to be set maybe in October sometime. The fall is usually a time, and if you're going to discover a financial crisis, it'll be discovered in the fall. So, and we work towards this opportunity. Charts and Markets, we've got a 25% off of annual subscription. And, of course, you can't run an open-ended subscription offer like this. So it's good through October the 12th, which in the U.S. is Columbus Day, and in Canada it'll be the Canadian Thanksgiving. So there you are. Seasonal opportunities coming up, and we have the tools to assist either traders or investors.
And Canadian Thanksgiving, by the way, was celebrated 60 years before they started celebrating the U.S. Thanksgiving. Just a little.
I didn't know that, and there you are a font of information.
Well, Bob, you're not the only one who knows history, although I have to bow to you most of the time. And we have several listener questions this week. The first one is addressed to Uncle Bob Hoye from Justin in Berkeley. And he said,
Uncle Bob, hey, that's a new one for us. All right. I like it. It's fun.
Justin asks, Uncle Bob, people often cite economists, but what is that discipline about anyway? There are lots of equations, but sometimes 2 + 2 can equal 5, according to these guys. There doesn't seem to be any empirical science or learning involved, clearly. Is this more of a social science than a real science?
Yeah, nephew Justin, you got a good question there. Decades ago, I got interested in financial economic history, and I started reading economics and everything from Keynes to the Austrian school with Mises. And after about 6 months of that, I realized I was reading about other people's ideas, and very little that was evidence-based or empirical. And this is the problem with economic studies, as they say from Keynesian, which was interventionist. And the only reason why Keynesian economics has become dominant is because it serves big government. It's used to transfer earnings, other people's earnings and salaries, to the state, and it also transfers power with the ability to depreciate. So anyways, I agree. Justin, I know where you're going with the question, and I like it. And economics from the Keynesian to even Mises. I've spent some time reading the Mises.org site, and they're in a sort of a theoretical world as well. And I think the karma of the marketplace is about to overwhelm the dogma of policymakers.
We have a question from Michael. Actually, two questions. The first one, Bob, everything seems so overbought right now that the only thing with any good upside potential seems to be the U.S. dollar. Given liquidity problems resurfacing this fall, would a good strategy be going forward be to sell equities, including gold stocks, hold on to one's core gold bullion, and park the rest of one's funds in the U.S. dollar?
Michael, you just wrote a paragraph for me. No, you've got it. The markets have been highly inflated, highly speculative, and throughout history, this has always been followed by the discovery of a liquidity crisis. And most of the time, they're discovered in the fall. And I think the rollover from September 2nd has been across the board. You know, it's the yield curve, credit spreads, commodities, everything. And I think it's leading into a serious liquidity crisis. And yeah, what seems to drive up the senior currency in a crisis is that in such a storm, the careful money goes to the most liquid items, which is now Treasury bills in U.S. dollar terms, and the other liquid item is gold. So, but the precious metals, and the next part, do we want to do the other part of the question?
Yes, we will. Also, Michael asks, should we divorce silver going into fall, given that it's also a commodity, and commodities can be unfaithful during market sell-offs amid liquidity problems?
Michael, you can still write lines for us. Yeah, again, our work has covered the gold-silver ratio. Well, it's very simple. In a boom, gold and silver go up, and silver goes up faster than gold. And in the bust, silver goes down faster than gold. So, and the gold-silver ratio goes up. And on the crisis into March, it got up to 127. And in December, just prior to that, the silver bugs were looking at the ratio when it was 87 and saying, this is a terrific opportunity for silver because the ratio is too high. And they just don't understand that the gold-silver ratio, we've called it metallic credit spread, and it narrows in a boom and it widens in a bust. But thanks for the question, Michael.
We zip overseas to Zurich, Switzerland, where Andre asks, the inflation-deflation debate is indeed fascinating. I would agree that central banks are on their own would probably fail to prevent deflationary forces this time around. However, unprecedented fiscal measures are now kicking in worldwide, and I think we are very early in this process. Now, if governments, with the help of their central banks, start to distribute money to the public, wouldn't it be highly likely that we will see above normal inflation somewhere down the road? In other words, this isn't going to end up like it did in the dirty 30s. Your opinion, Bob?
Yeah, Michael, Andre, thanks for the question. And again, I'm going to resort to history. As in the 1825 bubble was huge. And of course, London was the financial center then, and sterling was the senior currency. Bank of England was the senior bank. And in the crash, they injected everything they could into the market, credit markets. And it was followed by a long contraction. 1873, you had in the U.S. A leading newspaper editorialized that nothing could go wrong because the U.S. did not have a central bank that was constrained by gold. It was, of course, on a fiat currency and did not have the Federal Reserve. And indeed, the Treasury did go out and buy a lot of bonds. to kind of prevent contraction. And you went into serious contraction that in 1884, England, with the senior economists there then looked at the prevailing weakness and started calling it the Great Depression. That was in 1884, and the depression lasted to 1895. And then move ahead to the 1929 boom and bust, and the head of the New York Fed, which then was huge relative to the other Fed chapters, and it is the case now, they stepped into the market during the crash and bought bonds out of the market, exceeding its lending authority by a factor of 6 times. So it was pushing money into the market. And then at the worst of the first bear market there in July 1932, Barron's, in an editorial, pointed out that every anti-deflationary measure taken by the Fed is not working. And they pointed out that the anti-deflationary measures was a program of buying bonds out of the market. So what we're seeing now, although huge and very intense intrusion into the market and injection of liquidity, it's happened before and it didn't work. So when you're in a decade of inflation in financial assets, stocks and bonds, it's always been followed by a severe contraction, and I think it'll happen this time. Andre, your question is certainly to the point, and I hope this review of history will help out.
And one more question from Michael. Hello, Bob. What's your opinion on silver? Would you be a buyer of silver on a correction? I know you expect a bear market in stocks, so will silver do well, or should investors stick to gold stocks, which you've indicated will do well in the future? Regards, your friend Michael. Or Richard, I should say.
Yeah, thanks. That's also to the point. In a contraction, the silver will plunge relative to gold, and it's already weakening relative to gold. So the silver stocks will get hurt worse. So our view is that the action in gold and silver stocks was outstanding and became technically very overbought and would be vulnerable to a setback in the general markets in the fall, and this seems to be happening. I would prefer to trade the gold stocks, mainly because as this post-bubble deflation continues, silver's going to on the down parts, silver will get hit harder than gold. So we would be our overall view on golds is that one would buy the dips, and we have the ability to identify the dips. And in case on the other side, with the general stock market, it's opposite. The view is to sell the rallies. And this has been, I think this will become very effective policy. And thanks for the question.
We'll have more with Bob Hoye right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Value from success. Growth in discovery. Golden Arrow Resources is a well-funded gold-copper exploration company with proven management and prospective properties in Chile, Argentina, and Paraguay. Golden Arrow trades on the Toronto Venture Exchange, symbol GRG, on Frankfurt, symbol G6A, and the OTCQB, symbol GARWF. For more information, visit us at goldenarrowresources.com or call Sean at 778-686-0135.
Welcome back. We're speaking with Bob Hoye. A headline that caught your attention. President Trump addresses Latino community, says we are not going to be another Venezuela. What does that mean, Bob?
Oh, boy. Venezuela it should be in all the economic textbooks. A very prosperous country sitting on one of the great oil fields in history, and the socialists took over, and in 20 years, intense central planning has destroyed the economy. They can't even produce enough gasoline. Desperation there and disaster. And it was good, it was appropriate that Trump draw attention to this, because the policies of the extreme left and the Democrats is concerningly similar to Venezuela's. It's astonishing that they would introduce and push policies that will destroy the economy. But of course, each set of socialists in whatever century and whatever country, each believes that they can run it better this time. But hey, it never works. So this is why this election coming up is a really key election. It is whether to continue with a constitutional republic under a rule of law or change it all to a mob rule. Now, on the leadership in the Democrat Party, as with any socialist party, they don't care how much of a mess they make. The key is to be in charge and have control, and when you have authoritarian control like that, you alwaase end up with a complete and utter disaster. And this is where the Venezuelan should be a casebook study in political science and in economics, taught at all levels, because it is a credible example of ruining things in only 20 years.
Also, with Venezuela, the country's so broke, apparently they couldn't even import the paper that you use to print money.
Oh, that's a good one.
So, yes.
Yeah, good one, Jim.
Yeah, it's not a good place. Well, I also remember my wife saying she went to Czechoslovakia back when it was still a communist state, and people were lined up around the block, and she asked them, what are you lined up for? And they said, we don't know, but if everybody's lined up for it, it must be something important.
Yeah, that was the case.
We'll have more with Bob Hoye right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Bob Hoye. Bob, U.S. existing home sales are skyrocketing, hitting nearly a 14-year high. Prices are soaring. Is this because people are fleeing the inner cities for the suburbs or the countryside?
Yeah, I think you got it there. This is a profound change going on where people are seeing that downtown parts of cities are no longer friendly and creative. They're nasty and destructive, and particularly Democrat-run cities such as Portland or Seattle. It's a phenomenon going on, and it could be part of where most of the last 100 years has been a political trend to more intrusive government and more centralization of authority. And this could be a diffusion, people leaving the centers of power. Also, people are getting very much interested in their own personal freedoms and are starting to become intelligently critical of the authoritarian schemes out there, like you have to wear a mask when many medical authorities have pointed out that it doesn't do any good at all. So, and people are being arrested for not wearing masks. So there is a change going on, and I think one should study it closely. And at the moment, it's pushing up house prices in areas that may not have had hitherto such a vigorous bid. It also showed up in London, or in lumber, which soared to over 800 and has suffered quite a setback. So phenomenal things going on out there, Jim.
Bob, also, we have another headline. U.S. dollar holds advantage as many flee risky assets. What's the thing going on there?
Isn't that the case? This is the serious money, the careful money, will come out of overpriced assets when they're highly speculative, and they will then park money in the most liquid places. As a bubble tops out, the wise money is not concerned about getting the last dollar out of the rise, but getting safe. And the return doesn't matter, Jim. It's I'm going to park the money where I can get it back fast. And that would be, as I said earlier, Treasury bills in the senior currency, which is the U.S. dollar, and gold has a certain liquidity as well. And it's human nature that this is what happens. The flight is to the most liquid items, and at the moment that's Treasury bills and gold. So, but in dollar terms, the demand for the dollar in a post-bubble contraction may limit the advances in gold's price in dollar terms. But as you know, we always look at the deflated price of gold in dollar terms, deflated by the U.S. Consumer Price Index. And in great bubbles, it goes down, and which it did in our bubble. And then when the bubble's getting over, the real price goes up, and it relates to profitability in the business. And when the real price of gold goes up, it relates to costs falling relative to the price of gold. So the gold miners make money in a post-bubble deflation. So this is where we've been long the gold stocks since 2018 on this historical research. And we will, of course, on excesses such as recently meet, we'll trade them. But for investors, it's a long-term hold. Previous post-bubble bull markets in gold have lasted for a long time. And it's a great place to be.
Bob, thank you so much for chatting with us. And can you again remind people about your special offer?
Yep, we've got a special on at a good price, and this runs till Thanksgiving Day in Canada and Columbus Day in the U.S., i.e. close to October 12th, and we welcome people looking at our websites.
And people can just go to chartsandmarkets.com and they'll find the special offer.
Yep, or you could even go to bobhoye.com and see some of the research as well. We have sort of a couple of websites out there. So
once again, I'd like to thank you, Bob.
Good to be with you, Jim, and look forward to next week.
My guest has been market historian Bob Hoye. He's the chief investment strategist for chartsandmarkets.com. As you've heard, Bob loves to answer your questions, and they're great questions. They bring up topics that perhaps we wouldn't bring up. If you want to do that, you can send them to info@howestreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.